The IPO debate for Tata Sons is back in focus. Tata Sons, the holding company of 31 group firms including TCS, Tata Motors and Tata Steel, has remained unlisted since its inception. But the structure is now under pressure from multiple stakeholders. This is why the boards of Sir Dorabji Tata Trust and Sir Ratan Tata Trust are set to meet on 16th of May to discuss the possibility of a listing amid RBI's regulatory changes and internal differences. So who wants a listing? The pressure is coming from multiple directions. Within Tata Trusts, views are divided. Some trustees support a listing, while others want to retain the private structure. Two trustees, Venu Srinivasan and Vijay Singh, have publicly backed the idea. They have argued that future expansion will require large capital that only public markets can provide. The Shapoorji Pallonji Group, which holds 18.4%, also supports listing as it would allow monetization of its stake, which is currently not freely transferable. However, Tata Trust chairman Noel Tata has reportedly opposed the listing in private. The RBI's recent regulations have also significantly narrowed the options for Tata Sons to avoid listing. The revised norms for upper layer NBFCs have tightened rules for large financial entities like Tata Sons. Under draft rules issued in April, companies with assets above 1 trillion rupees or those with access to public funds may be required to list. And as of March 2025, Tata Sons reports assets of around 1.75 trillion rupees, and that places it in the upper layer NBFC category. While experts say the rules make it harder for Tata Sons to stay private, the RBI has not publicly clarified its final stance. The company's request for exemption is still under review. So how did this controversy start? It began with Tata Sons' 2024 application to the RBI, where it sought to surrender its registration as a systematically important core investment company. The company argued that after repaying over 20,000 crore in standalone debt, it no longer accessed public funds and should be exempt from tighter NBFC norms. However, the RBI's interpretation contradicts that position. Tata Sons is the holding company of a large corporate structure with cross-holdings in listed companies like Tata Steel, TCS, Tata Motors and Tata Power. And all of these companies raise funds from public markets. The RBI clarified that even indirect exposure through such entities can still count as access to public funds, and this makes its deregistration significantly harder. The boards of Sir Dorabji Tata Trust and Sir Ratan Tata Trust are expected to discuss RBI norms and their implications for a possible listing. Board representation, leadership reappointment, and a review of performance are also expected to be a part of the discussion. With regulatory pressure building and differing opinions within the trusts, the question of whether Tata Sons stays private or moves towards a public listing is back in focus. Follow Business Standard for more such stories.